Oh well, hi guys. I'm just making this video to actually to tell you more about order blocks and then whatsoever we're trading. So as you can see now, I have a chart here which is for Euro USD, but then it's not really necessary for me to actually. I'll tell you now. So the thing is, what we are using is we are following market structure, and then also the order blocks that I just told you guys about. So we're following order blocks, market structure, and then some other concept that I'm gonna use while we are recording. So you will have to forgive me for the inconvenience because you know I don't understand this thing. What is it doing? Meeting in control, or maybe it's normal. Maybe it's normal. So guys, about market structure, like the first thing that we know is that we know a textbook market structure, which is this type of market structure. All right. So this is our textbook market structure. It turns out to be let me type it out for you guys. Textbook market structure. It's not the real market structure example, just a textbook market structure. You get a point. So this is the structure. Sometimes we see it on in our PDFs or whatsoever, because in the textbook market structure, what they say is that okay, the market is creating higher lows. Okay, sorry. Higher highs, higher low, higher high, higher low, higher high. You get a point. So this is okay. Let me type it out for you guys. HL for higher low. HL. HL. And then again we have what? We have HH. Higher high. Higher high. Higher high. Isn't it? So all these things are just in the textbook example, but in the real market structure is not like this. The real market structure is not like this. You get a point? So this is how we see the what's called this, the textbook market structure. How they actually simplify the illusion of market structure, isn't it? So this is not how market structure is like. I would like us to actually check something here. Then you will see that okay, this is not really a proper market structure. Okay, let's first since I was showing you guys a bullish example. So here I can say it's a higher low, but then simply let's check on the higher time frame. Let's check here. Okay, yeah, it is. This is a higher low because this was the swing low. You get a point. So it was a higher low. So I can say from our actually the real life market structure, if higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. You get a point. But then not the illusion of this. What's the thing? Not the illusion of this textbook market structure. The market doesn't move in lines. You get a point. So this is what we have mostly on textbooks or maybe let's say PDFs and so on. So again, now this is bearish structure. So on bearish structure, what do we have? We have what? We have lower high, lower high, lower low. So this is how the structure is going, breaking previous lows, respecting the highs, breaking previous lows, respecting the highs, breaking previous lows, respecting the highs, and so on. So this is the lower low. So this is the structure that we currently have here. So apparently this is a high. We don't count it as a lower high. So now we count this as lower low. We take this as lower high. We take this as lower low. So if ever the market has some potential to reverse here and come to the downside, you're gonna take it as what? Lower high, lower high, lower high, and then what again? What else? Lower low. You get a point. Lower low. So this is how it actually goes. So now, since I told you guys about market structure, there is something that we use in confluence of our market structure thing. Okay, let me show you guys. What we use is okay, yeah, okay, again guys, in the high time frame market structure, you must know that okay, this market structure is fractal. Everything that you see on high time frame can also happen on lower time frame. You get a point. Structure is very fractal. Everything that you see on higher time frame happens on lower time frame as well. So structure is very fractal, guys. So let's say now on let's say on we are on a 4-hour time frame. So we get a pullback coming to the downside. So this is gonna show us what? This is gonna show us lower time frame structure, isn't it? This is gonna show us lower time frame structure, lower high, let's say in the 4-hour time frame we are in a bullish trend, and then it happens that okay, now we actually get to the point where we're getting a pullback, we're creating a high low. So it happens that okay, on that higher low we see multiplex structure. Multiplex structure simply means lower time frame structure. So even when going to the upside, you will see an uptrend. We'll see an uptrend in an overall what? In an overall uptrend, isn't it? Oh, sorry. In an overall trend, isn't it? So that's how actually it goes, guys. So even here on this leg here, it might happen that we see something like what? Something like this. In that leg going to the upside, it might also happens that we create that higher low, and then now we continue going to the upside, high highs, high lows, and high highs, and so on. So this is how it actually display itself. Yeah, I can say that's how microstructure display itself. So guys, as you can see now, this is the high time frame. We are in a what? We are in a downtrend, isn't it? We are in a downtrend. Let me show you guys. Okay, let's start from here. Lower high. Yeah. No, it's a high. It's a high, not lower high. So we simply get a lower high here. Something. Okay, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and then we get the lower low again. So guys, it happens that okay, in this time frame, this is the 2-hour time frame. That's why we're actually having a bearish trend. You get a point. So what I can see is that you're gonna see somewhere where like we are in a kind of uptrend, all right, but then it's on a lower time frame. Let me show you. You see here, here if ever we go to the lower time frame, we're gonna think okay, now we are in an uptrend, isn't it? But then that's just a pullback. Get a point? That's just multiplex structure. It's not really an uptrend. So really an uptrend, high low. So here we creating some equal highs and so on and so on. But in like whenever, if ever we actually try to apply our techniques, we're gonna think, okay, this is an uptrend in the lower time frame, but then this is just a multiplex structure. You get a point. It's not either a bearish trend, it's not either a uptrend, but then it's just a multiplex structure. It's not real. You must know that below 1 hour time frame, there's no structure. You get a point. Below 1 hour time frame, there's no structure. So here now, this is where we actually have a proper uptrend on the high time frame. Oh, sorry. You have what? An uptrend. You get a point. We have an uptrend. So, but then I can bet that okay, somewhere where we're having this kind of pullbacks, it will happen that okay, we think now it's a bearish trend. No, it's not a bearish trend, because like it's just a multiplex structure. You don't really have to follow that multiplex structure. So now like this is an uptrend. You see, okay, now we created this lower low, and then this was the lower high, but then we violated that lower high. We came back to create a higher low, equal highs, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and then this is the equal highs again. And then we have what? A higher low. We'd have this higher high. So for us to get in a bearish trend, we have to break what? We have to break this previous structural low. So after breaking this structural low here, now it's called a bearish trend. We are in a bearish trend. That's where we create lower lows, lower highs, lower lows, lower highs, and so on. You get a point? So guys, this thing is really easy. Mapping up your structures and so on and so on. So guys, we have another thing. We have this thing called an order block that actually gives us confidence in trading whatever we're trading, right? To have that thing called an order block. So guys, since we are in an uptrend, creating what? Creating higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. So where will order block be placed here? Okay, order block will be here. Order block will be here. Order block will be here, and so on. But then you must make sure that you're trading in the order block that is actually in an uptrend. If ever we have an uptrend, you must always trade the bullish order blocks. Bullish order blocks. What is a bullish order block? Bullish order block here is gonna be what? It's gonna be the last time candle that we'll be having here. Bearish candlestick before this whole move up. You see, we have this move up going to the upside, and then we have this. So you'll be surprised when you're having order blocks somewhere here, but and they always fail. They always fail. They always fail. Oh, sorry. You're surprised why? Okay, these order blocks that you have here are failing. You'll be surprised. All right, but then you again you'll be surprised why these order blocks on the high lows are holding price. Your point. Okay, order block is just a fancy name of supply and demand. From my experience, it's just supply and demand, but then in a different type of fancy name. You get a point. So guys, in this trading, you have to trade within the high time frame market structure. So let's say now you have what? You have what you call this? Bullish trend. You have bullish trend, including high highs, high lows, high highs, high lows, high highs, high lows. So guys, you must trade the order block that is left on higher low. You get a point. So on the high low, we will have this last down candlestick here, which is a bearish candlestick, and then you will look at that candlestick to actually take your price to the upside. You get a point. So this is what is actually gives us confidence in order to trade the type of method that we actually trading. So actually, and then our risk reward ratio whenever we're trading these things, like we're targeting these previous highs and a stop loss just below this order block. You get a point. So that's how this is how it actually works. You get a point. So I don't know if ever you find this video, you might have went to my what you call this, my PDF or whatsoever. You get a point. So if ever you went through my PDFs, you understand so many things here. So just here I'm just making an example visual. You get a point. So you must trade within the high time frame bias, high time frame structure. You get a point. So simply like let me show you. So there are many things that I didn't mention here, but then there will be videos are still coming for me to actually mention those things. Like I don't want to mention them here, like I'm gonna confuse you and then you'll be wanting to actually learn them and so on. So you can see that okay, this is an uptrend breaking previous high, breaking previous high. So how are you gonna catch on an order block? How are you gonna catch an order block in this trend? Like I said, you must trade within the high time frame trend. You must trade within the high time frame structure. Get a point. So if ever we're having, okay, let me do something like this. So you see this structure here. This structure is an high time frame directional bias are bullish. You get a point. So means you must be looking to take actually bias. You get a point. You must take buys that actually are really valid. You get a point. So okay, now let me show you an order block. Let me go to the 3-hour time frame. Oh shit. Well, I did flops, guys. Actually, this is a mistake. I don't know what happened for me to actually extend the screen like this. But let me try to reset the chat. Okay, yeah, I won. So guys, you can see that okay, we have this uptrend, and then order block, like I said, it's gonna be the last down candle on a high low. So this is where we actually have a high low on the minus time frame. So this last down candle here is gonna be our what? Our order block. And then what do we have again in confidence? Like I told you, we have this thing called BOS. BOS is simply structure, break of structure. It's breaking the previous high, previous low or whatsoever. So now I can say here also we have what? We have break of structure to the upside. Because I bet it was something like there's something like a lower high there on the lower time frame. Let's check. But I bet okay, yeah, like I said, it was a lower high, but then we must be trading in the high time frame structure. You got it. So means you'll be looking at this candlestick as a what? As an order block. POI and market as POI, which is point of interest. You got a point. So there's something that I said I didn't want to mention, but then I think I have to do something that is called imbalance. Okay, let's just say this is a bearish. So this is our order block. Followed by this bullish candlestick. And then there is another bullish candlestick following or thereafter. Let me try. So now, what is an imbalance? This is an imbalance. This is a gap between these three candlesticks. Sorry, guys. There is a gap between these three candlesticks, isn't it? This is the gap. So what do we call this gap? I mean this gap here. We call it imbalance or IPA. IPA, which is imbalance in price action. Do you get a point? Imbalance price action. You get a point. So somehow, as us smart money traders, it tends to give us some kind of confidence that way. Okay, we are really trading an order block, because an order block is where we actually look for, like, this is where we think, okay, maybe the banks really took trades on this block, since we have this push to the upside that broke structures. You get a point. So it gives us confidence, guys, that okay, there is more percentages of buying from the institutions. You get a point, and so on and so on. So this turns out to be our imbalance. You get a point. So now this is how we're gonna do it. I have this template here of imbalance. So now we have that imbalance marked up, and then what do we do? Okay, somehow you can set off your things, your buy limits on the 50%, targeting whatever the previous, whatever the high we will be having there. Let's just wait for the market to create actually a proper higher high. Okay, so I can say from my experience, I can say, okay, this is the higher high that we actually targeting now in these trades that we are about to take. Remember, BOS, IMB for imbalance, POI for point of interest. Okay, now wait. You can see that we're tapping in our order block, isn't it? So now we hit TP, taking what? Our previous structural high. We hit TP, isn't it? So guys, this is how to trade, right? Okay, here now again, like I said, you'll be having order blocks on both sides, but you must make sure that okay, only one is real. Only one is real. Get a point. Why we actually breaking structures? You get a point. So here, the bullish one, the bullish order block was the real one. So now, guys, having this market that okay, we come into the 1,000. Okay, here, let me show you guys something. Okay, you see, we have this order block failing. Why? Because we are in a downtrend, isn't it? We are in a downtrend, and then why do we have this order block holding price to stop going to the upside? We are in a downtrend. We actually selling this market. We actually selling this market. So why do you think you can buy here? You can actually try to buy on the lower lows. BOS low, break of structure of a low. So here now it's a small, it's not an order block, but it's also a break of structure. Break of structure. So here, if ever I catch this trade, my thing, let's call this. My target will just have been here. Just 88 pips. That's actually legit. Then my stop loss just 8 pips. Do you get a point? So 1 to 10 risk reward ratio of have played out here. You get a point. So now, guys, the thing is, we continue trading, we continue trading, we continue. So this is where there was some kind of bullish structure coming to create this point of interest here. So now what happens is that we can have that thing is a point of interest, isn't it? Then here we can have something like just market as liquidity. Oh, I haven't mentioned liquidity yet, but then I will simply do maybe in the next video or so on. If ever we don't have the limit time on this one. You get the point. So now we have these things, these highs where we actually, trainer and traders can look. So actually, maybe when the market comes back here, oh sorry, comes back here in the future, they'll be looking for what? For a third touch. But in that third touch, for me, it's not valid because this is how they'll be trying to take their cells from here. But this video is for my people who are in who lend the smart money already. So I don't think they won't understand. They understand the liquidity things and so on and so on. So this is how trend traders might actually look for, charge and sell, isn't it? But in me as money traders, money trading institutional trader, I'll be looking for the market to violate this trend line here, and then come to this point of interest. If ever here we create a proper lower low, and then we're looking to take the market the whole way to the upside. You get the point? So this is the last up candle here. The last up candle here is going to be our order block. You get the point? So this is where we'll have some, imbalance in price action, and then here we don't have any valid imbalance, and then here we do have one. There. So guys, I'm looking for the market to actually come to the upside and then come to this zone. I don't care how long it takes, but in the future, the market has to come there. I just want to do something. Okay, I think I'm failing. So for me to actually get that, okay, the market has came to my point of interest. I'm setting an alarm there. Yeah, great. Okay, so I'm setting an alarm here. So the market in the future, when it comes on this zone, I will get an alarm so that I can get to actually sell this thing. You get a point. So far I managed to actually explain about order blocks and then block of structures and so on and so on. So now let's actually check out what is a liquid. Okay, I think I will have to actually reveal something. Okay, guys, this is the first strategy was about order blocks. So the second strategy is gonna be about this thing here. So this strategy works very well on small time frames, 15 minutes and so on. You get a point. So this strategy is a strategy about daily pip cycle, where you can generate pips daily without without having any what you call this okay, let me show you guys what is a daily pip cycle. So guys, I'm showing you now in few minutes. So daily pip cycle is actually a market of like a accumulation, manipulation, distribution. So from our daily pip cycle, we're gonna trade the sessions trading. So like the sessions trading go like we have this thing called the market ranging. From what time? I'll mention the times where the market usually actually ranges. So we're gonna use Asian range. And then the manipulation happens more like by London session. I'll still mention the times. Don't worry. And then actually the distribution happens more like New York session. So this is where we actually have our what? Oh, sorry. Asian high. Asian low. So that's where actually market is ranging. So now, what time does the market range? The market start ranging from 2 o'clock in the morning South African time. From my South African time, I know it's like 2 o'clock up until 8 o'clock a.m. You get a point. So what time does the manipulation actually happens? The manipulation happens between what? Between 9 o'clock a.m. up until 13 o'clock p.m. Like I said, SA time. So here again, we have New York session. New York session where we actually have what? 14 o'clock up until 18 o'clock. That's why we actually have New York session. That's why actually people manage to kill us 100 by 15 days or whatever strategy they use, and so on and so on and so on. So this is London. London session. Asian session. New York session. You get a point. So, and they are specific times, like you can see. So now I don't think I still have enough time to be here. So I prefer us to actually go on a chart and then actually actually show you. Okay, something that I didn't mention. This is how this thing goes, guys. Range. Market manipulates to tapping in our order block, then push to the upside. Good point. Market arranges, market manipulates to our order block. So here we just have liquidity created on the lows, liquidity created on the highs that we actually have to take out by our London session and the New York session. So we're trading, since if ever we're trading the daily people cycle, we must trade within the London session and New York session. Oh, sorry. Doesn't want to be removed. So guys, let me show you now. Let me show you guys now. So guys, you can see that, okay, we're having this market. Okay, let's actually play it from here. So now in this market, let's mark our order block just now. Our order block is going to be this candlestick here. The last time candlestick there. It's going to be our what? Our order block. You got a point. So now again, let's actually check from 2 o'clock in the morning. From 2 o'clock in the morning, we were having this market up until what time? Okay, this is 8 o'clock. So we'll have to take our zone from there up until here. So this is the low of the Asian session. This is the high of the Asian session. You can see that, okay, we're having this choppy market here. You got a point. So by London session, we would like to get something like, okay, market comes to a point of interest. And then we push the market to the upside. So by New York session, we might create a lower no, not New York session, not somewhere here. Yeah, somewhere here. We might come to create a lower high and still push the market to the upside. You get a point. So now what are we targeting? We are targeting previous daily high. So this was on the high here was created on the 28th of October. So now we are on the 29th of October. So we're expecting the market to actually take out that high. So this is where the actually market is this Asian range is ending. And then this is where the London session starts. This is where it ends. This is where New York session starts. This is when New York session ends. So let me write the times for you again, and then mention the session name. Asian. 2 o'clock. AM. They're all in the AMs. You got a point. So now again we have a London session. I'll just write LDN on London session, guys. London session, I'm writing LDN. So it starts from 9 o'clock up until 13 o'clock. So it's 9 o'clock AM and 13 o'clock PM. You got a point. So now again we have New York session. So on the New York session, I'll just write NY or NYSE. So NY session starts from 14 o'clock up until 18 o'clock. So like I said, here it's like the market creates liquidity on the highest and then on the low. You get the point. So we must actually, it's a must for us to actually manipulate this low coming to this point of interest. So I can say you can set your limits from the London session. Targeting what? Oh shit. Oh, sorry. Targeting the previous high. You get a point. And your stop loss is just 18 pips. So let's see. Let's see. Okay. So now you can see that, okay, by London session, we managed to take out the Asian low, which is from here. The Asian low we managed. Okay, let me identify for you. Asian high. So we managed to take out the Asian high, the Asian low. Then this was the London session. Like I said, it opened and then come to open the retrace. So you must trade in an alignment within these sessions. It's really nice. It's really, really nice. So this is the time where we actually enter our NY session, and then like I said, it's gonna create a high low. So this is where the market created the high, and came back to create the high low, and then continue pushing to the upside. You get a point. So we ended up hitting TP, like I said, previous daily high. Okay, let me just mention it for you. PDH, previous daily high. So from my experience, what do you think? Also from your experience, okay. From my experience, I think this is what happens. So I think this is what happens. Why? Okay. We have what? I'll just write OHLC. O for open. Oh no, OLHC. Yeah, OL. So we open. We have that Asian branch. have touching range after opening. Oh, sorry. So now we get what? We get the low of the day. L as for low of the day, which is also a London manipulation. Let me just write an X there so that you know the X is actually for London manipulation. We manipulate to the downside, coming to our point of interest. So New York kicks in. So this is the London session you manipulate and the New York kicks in. So I can say this is where we have the H. New York also helps us to create what? To create the high of the day. You get a point. So now this is where we will actually have what? C for close. So now we close the day. So means by the New York session from up until maybe 18 o'clock and above. So we create the high of the day and then we come to the we close price. Close price. You get a point. So let me just okay. I'll just say it's LTN manipulation. So now I can say by New York session we have up move commences. NY we have up move commences. We're having the movement to the upside. And then we lose price. You get a point. We lose price. Let's see what happened. No, okay. So we did lose price without actually creating the higher low whatsoever. So, but then this is actually the type of thing that we actually get to trade NAS100 mostly daily and so on and so on. You get a point. This is how we actually get to trade the NAS100 in dice. So guys, I will still make another video, which I don't know when I will send it. So guys, let me just, for now I'm done. And then I end the session.